Welcome to Trading Nation. I'm Brian Sullivan. We're joined by Jeff Saut, Chief Investment Strategist at Raymond James. Jeff, good to hear from you again. Listen, we were all worried for months about whether any derailment of a GOP/Trump agenda would send stocks down. As we go on, it looked like that wasn't that big of a deal for the equity markets. Now the North Korea tension heats up, but Friday we recovered a bit. How worried are you about North Korea and the increased rhetoric, if at all?
Well, first let me say that our short-term proprietary index flipped negative and into cautious territory on Thursday of last week, and we wrote about it and told people you might want to trim some positions. Since then, there's been some technical damage done. I don't think it interrupts the secular bull market, but I'm not sure the downside is over with. As far as North Korea goes, I don't think there's much going on. I think it's a lot of bluster. They haven't closed their borders. The trade with China continues to flow. There's a delegation over there from Equatorial Guyana, along with the agriculture minister from there. And normally, if something's going on in North Korea, they tell those or ask those people to leave. And the army hasn't really been put on alert. So I'll probably have to eat those words. But as it looks right now, I don't think we're going to war.
Okay. And so outside of even a skirmish, you know, it doesn't have to be nuclear war or nothing. There could be other things that happen. Do you think soldiers shooting at each other, some lone soldier in the DMZ freaks out, you know, a young kid and whatever, markets would react very negatively to that, I would imagine, before recovering?
Yeah, I agree with that. And you've done technical damage. The composite and the S&P closed below their 50-day moving averages. The transportation average closed below its 200-day moving average since last November. And the Russell 2000 is very close to closing below its 200-day moving average.
Do you think then the path of least resistance, North Korea aside, is down for the market?
I think the market could pull back a little bit here, but it's still a secular bull market, Brian. And you know, I think you've got another 6, 7, 8 years left in this thing on the upside.
So how long will the downturn last then? Just a short-term, couple-of-month thing? I mean, August is traditionally the worst month for the equity market.
I actually don't even think it'll be a couple months. I think it might be a couple weeks.
That's it. So any pullback would be a discount for longer-term investors, in your view.
That's what I think.
Could the Fed screw it up? Does economic, you know, if we get 2% growth, does that screw it up? What's the risk out there fundamentally outside of some geopolitical thing?
Well, you could have a policy mistake inside the D.C. Beltway. You could have crude oil go to $150 a barrel, but I don't think that's going to happen. I think you've transitioned from an interest rate-driven secular bull market to an earnings-driven secular bull market, and in the long run, it's all about earnings. And earnings continue to come in, as I've been saying, better than people expect. And
you think that'll be, I mean, obviously we just started the third quarter, but you think that will continue as well?
I do. I think you had the profits trough in the second quarter of last year, and earnings have been improving ever since.
So what is your worry then?
I quite frankly don't see, unless there is a black swan event, a big confrontation with North Korea, I don't see what derails the economic recovery, and I don't see what derails this secular bull market.
The train's just going to keep on a-rolling.
That's the way it works. They run 14, 15, 16, 17, 18 years. I don't think it's any different this time, and there aren't that many of us left around that have seen a secular bull market.
Okay, I've been trying to kind of find something you'd be worried about. Let me flip it, Jeff. Would you say that this is one of the most optimistic? You and I have been interviewing for over a decade or more. You sound, to me, more optimistic than I can ever remember hearing you.
I've been pretty bullish ever since October of 2008. When 92.6% of all stocks traded on the New York Stock Exchange made new lows. I'm 47 years in this business. I've never seen that. That's a 7 or 8 standard deviation.
Let's be clear, that was an extremely special circumstance coming off of, you know, a great collapse.
That's exactly right. But nevertheless, it happened. And I think we have years left to go in this thing. In fact, I think this is going to be longer and stronger than the 82 to 2000 secular bull market.
Well, as somebody with 2 kids to put to college and a 401k plan, I hope you are right, Jeff Saut. Thank you.
My pleasure.
All right, Jeff Saut, Raymond James, very bullish for the long term, and he's been right. Folks, thanks for watching. I'm Brian Sullivan. We'll see you next time.
Hey there, thanks for checking out CNBC on YouTube. Be sure to subscribe to stay up to date on all of the day's biggest stories. You can also click on any of the videos around me to watch the latest from CNBC. Thanks for watching.